Hey everyone, this week on the podcast, we had a chat with Ryan Selkis, the co-founder and CEO of Messari, a company that is building tools to promote greater transparency for crypto asset investors and industry participants. I think a lot of you will probably be familiar with Ryan. He's definitely one of the most prominent people in this industry, and he's cultivated a great personal brand. He's outspoken, and he definitely shoots from the hip. I first started reading Ryan's blog, The Daily Bit, back in 2014, and around that time, it was one of the only sources of news in this industry, apart from maybe reading the Bitcoin subreddit. Ryan went on from there to work for DCG, where he oversaw the operations of CoinDesk, which is the largest media outlet in events business in this industry. So this was a lot of fun, this episode. We talked about a range of topics, including Ryan's breaking of the Mt. Gox story. We talked about his views on which crypto asset networks might be grandfathered in and might be commodities and not securities. And we talked about why Ryan thinks that we're about to see $1 billion worth of M&A activity from exchanges over the next 24 months. So without further ado, here's our conversation with Ryan Selkis of Messari.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Ryan, thanks for joining the pod.
Thank you for having me on. Was that just the outtakes we started with?
Yeah.
Nice.
We'll
just run with it.
For those of you who are not in the room, which is all of you, I suppose we were just talking about the Citadel artwork that Ryan is commissioning for the new Messari office, which is a really nice office now that you've raised funds here. You're expanding the team.
Yeah. I mean, it's maybe a sidebar story, but we got very lucky with this place. We stole it for like 25% below market because they screwed up with the other lease that we were supposed to get. Typical WeWork. So we're sitting in one of our conference rooms within our office, which is a rarity in New York WeWork, of course. And we'll be happy here, I think, for the next year.
That's great. Well, I'm psyched that you're on the podcast. We usually start these with a little bit of an origin story, how you heard about Bitcoin. And I think your origin story is particularly interesting, and you were around a lot earlier than a lot of the people in this industry. So how did you hear about Bitcoin, and what first sparked your interest?
Sure. Yeah. I mean, I'll go into that first. Thanks for having me. And I think you and Nick have been doing a great job with this. It's one of the more entertaining podcasts for sure, and more in depth. My origin story is probably like a lot of others. I had first heard about Bitcoin. I've been saying 2012 for a long time. It's actually 2011 because I keep telling the story about the debt sequester, and I had this classically wrong actual bet, but the thesis was right, where the S&P downgraded the U.S. debt, if you remember, and this was following this debt sequester crisis where the government basically couldn't pass a budget. And I went long gold. I shorted the U.S. Treasury ETF, and I kind of ignored Bitcoin because at that point you would have had to go to a cafe and give somebody dollars for a USB stick, and I didn't want to get stabbed. So I didn't think that was like a very good call, and shame on me. But I got in the kind of tiny exposure to it when I had that thesis, and I went 0 for 3 in the execution, but the thesis was right. So 2013, Fred Wilson invests in Coinbase. The Winklevoss twins come out with their ETF proposal. Barry and DCG come out with the Bitcoin Investment Trust, and they shut down Silk Road. And this was right or like in the high double digits, right as kind of Bitcoin for the second time that year was getting into triple digits. It had the brief spike above 250 at Mt. Gox earlier in the year, but this is in September or so, August, September of 2013. And I was in the process of winding down a startup that I'd been working on for 2 years. Not important, but kind of in the charitable payments space. And part of our business relied on the IRS to approve our tax-exempt entity. That took another 2 years to ultimately get approved. And that's not how startups work, right? So I was in the process of winding down that startup, had deferred a year at business school, and bought a little Bitcoin, coincidentally. That went up 6 times, and I had 10 months on my hand to do nothing. So I said, there's not enough time to get another job. I'm just going to go like whole hog on this. And at that point, it was basically just Reddit that existed for information. And CoinDesk was created a few months earlier, but still very, very early. And so, I looked around at the content. I said, I'm just going to start writing about this because it's exciting. And some of my Reddit comments had gotten picked up. And I started emailing some friends about it, including Dan Elitzer, who you know well from IDEO, and kind of a few other kind of early OGs that people may know about. And it just kind of took off. So the big kind of break for me, people think about me and Mt. Gox, right? And breaking that story. But it was actually going to a couple of the conferences and meeting a couple of the folks that were the moderators for XBTC or XGBTC, something like that. It was basically a Silicon Valley email listserv with like 150, like the who's who, like OG, executives and kind of Bitcoin folks in the industry. And that was like a network opener for me, and got half of them probably to subscribe to the daily bit that I had. And then, they would tell their new hires and kind of cascaded from there, and then culminated with me getting my hands on the Mt. Gox documents because I had that network in place.
That's a crazy backstory. And I put myself back in those days. I was in business school at the time, and I was reading Reddit. That was really, as you say, that was the only source of information. And then I started
before
reading
the fork wars, and then it became
and then it became two Reddits to keep up on, and eventually crypto Twitter, and I guess now we're migrating to other platforms. So you started writing under the 2-Bit Idiot handle. What was the idea there to not write under Ryan Selkis at the outset?
I'll take a little bit of like creative license, right? And the history is kind of never as perfect or beautiful in prose as it is in reality. But as I mentioned, I started by writing, a couple emails to some of my friends in venture that I'd worked with, and just more generally, and telling them about this thing that I was thinking about doing next. And they thought I was crazy. And as I was posting, when I kind of got into Reddit, I didn't want anything tied to my real name, because one of my friends had said, just in case this actually turns out to all be illegal, you might not want to use your real name, right? And so, I thought it was kind of like a good quip on Reddit to be like the 2-Bit Idiot. And it just kind of stuck. It's a kind of a fortunate accident of history. But I would say that's maybe the most fortunate accident in my career, because there's that, I think it's like Oscar Wilde or someone, you give a man a mask, he'll tell you the truth. So I was able to, without really knowing what I was talking about, not that much has changed, but without really knowing what I was talking about, write with a little bit more authority and snark and authenticity than I may have otherwise if I was trying to basically write the equivalent of research reports in the way that you think you have to write research, right? So the style stuck, the name stuck, and then, once the Gox news broke, that's when I was kind of unveiled as this non-anonymous, actual quasi-credible source based on what I'd been doing the last few months.
Yeah, we were talking about briefly before we got started. A lot of people probably in mainstream finance first heard about you in Dan Primack's. I don't know if he was at Fortune or if he was at Axios yet back then, but he had a daily email, still does, and you were kind of the main event when the Gox documents broke. So talk a little bit about, for those maybe who aren't familiar, I think a lot of people know what Mt. Gox is and what happened there, but how did you come to break that story?
Well, I've already promised Charlie Shrem that I was going to tell the full story for the first time on his podcast in a couple of weeks. So I'm going to ahead of the anniversary, and I'll kind of get into the gory details. But Charlie helped me authenticate the documents that I had. So he had DM'd me, and he was under house arrest at the time. I had visited him a couple of weeks prior with a bunch of other crypto folks while he was under house arrest. And he immediately started kind of messaging with me and said, hey, I can help you figure out if this is legit or not, because he was on with Mark Karpellis on IRC or whatever. And within a matter of a couple of hours that night, Charlie was like, yeah, Mark said this is legit. And so, I went with it. But that's kind of the broad strokes. But really it was it was insane 24-hour stretch, 48-hour stretch, really, that whole week, because you got to remember, I didn't have an editor. I didn't have any air cover from a company, right? I didn't have legal cover because it was just me writing. There was no the concept of defamation insurance or whatever for if I was wrong on this, that just didn't exist. So I was panicking, right? And at the same time, I'm writing from my fucking kitchen table with my dog on by my feet, and my wife wondering, my now wife, then fiance, wondering if she should break off the engagement because I was manic. But it ended up obviously being correct. And even though a lot of people disagreed with the tone and kind of the aggressiveness, I think, it stuck with them that I was able to do it kind of unilaterally and continue writing and analyzing with that new audience that surprisingly stuck with me for the most part, right? It wasn't like a big spike in subscribers and followers and then a big fall off. It was kind of like a discovery period. And then, oh wait, this guy actually covers the pulse of the industry pretty well. Let's keep tabs on them.
Yeah, I mean, that was a huge break. One of the interesting things, I went back and read some of your writings from that time, and you were, I think, justifiably really worried about the future of Bitcoin at that point. I think there was something like, 6 to 10% of total Bitcoin supply was on the platform. So obviously, looking back on that, Bitcoin thrived. Have there been other instances where you've been that worried about the future of Bitcoin?
I mean, I think everybody was worried. And even into 2015, I mean, see, I'm in this weird position where in late that year in 2014, I joined Digital Currency Group. So a lot of the shit that we saw in like late 2014, 2015, when we dipped below 200 at one point, and with our portfolio companies, like I never know what I can and can't say, like in hindsight, even though it's like ancient history. But some of the biggest companies right now in crypto, they almost went under. So Mt. Gox might have been pulling the yarn, and there was kind of a gradual unraveling, but it was not unlike this past cycle where once you have the downdrafts, you lose all the momentum investors. It's no longer like I'm going to get rich quick or I need to rush into this. And especially back then, Bitcoin's still at a pretty sizable inflation rate at the time. So you're just getting this persistent sell side pressure like every single day, this liquidity that has to get, mopped up, and no net new buyers really, because there weren't any apps, there weren't any kind of new macro narratives that were driving things forward. So I think that general time was worrying because you weren't sure what impact it was going to have, A, on newcomers, and B, on folks that you're trying to convert from skeptics. If the last thing that they see is 10% of the supply is hacked and dirty money, and my concern was less about the security of exchanges and more about, will the regulatory blowback from something like this essentially lock down Bitcoin exchanges, or will Congress or the regulator say like, you're not fucking doing business in the country, right? Especially at that point, you kill the liquidity ramps, you essentially smother the baby in the cradle, right? So it wasn't just, oh, no one's going to like Bitcoin now. It was, this was really, really bad. So if there's a heavy-handed reaction to it from the powers that be, Bitcoin is too early to defend itself.
That makes a lot of sense. I mean, back then, the only way to get money onto Gox was wire transfers. And you think about even still right now, the fiat on-ramps are such a single point of failure in this industry that really could be clamped down.
Yeah. I mean, I hope that Silvergate doesn't go out of business.
Right. They're one of the most important companies.
Yeah, I mean,
in this.
Silvergate banks the vast majority of crypto businesses and funds right now. If those relationships fall by the wayside or it becomes more difficult for them to service customers, then the industry is in pretty big trouble. But the good news, the exact opposite of that is, it is pretty good to have a bank like Silvergate that their business and ongoing success requires them to service these companies, because it's, I think, now the majority of their business. So it's kind of this interesting dynamic where they are a very interesting, strategically important entity that no one really talks about, aside from those kind of in the know on kind of the operating side. But it's probably the company that I'd look most closely at, and you have the benefit of actually looking at their quarterly filings because they're public now, right? So it'd be very interesting to kind of watch the 8Ks and such from them as almost the canaries if you're looking for regulatory trends in the US in particular.
Totally. I mean, we put this in our newsletter a couple of weeks ago, but I continue to think that banking is one of the biggest opportunities in this space. So if you believe that we're going to live in a world with cryptographically secured assets, public blockchains or security tokens even, and you're a bank that's developing that expertise in-house, you can develop that compliance rigor, develop the ability to actually understand what's happening on these blockchains. What a competitive advantage when this really starts to take off.
Maybe. I think that's true for a while, but at some point, progressively bigger banks, I'm not talking about JP Morgan tomorrow or Wells Fargo tomorrow, but at some point, progressively larger banks than the ones that currently service the market, maybe it's SVB, can just acquire best-in-class services that will give them the capabilities in-house to do this at scale. So it's all a matter of degrees and scale and timing, really, because the ROI just isn't there for like a mega bank. It is there for a small bank, like, so no one heard of Silvergate, right? Pre-crypto. It was a small regional bank in Southern California. I think the same is going to be true for the kind of the mid-level banks, of which there are several that already have some relationships, SVB included, Metropolitan Signature. But that continuing level up, I think, will be interesting to watch. And then the other areas and incumbents, if you can call them incumbents, that might have the advantage right now with crypto banking are the new fintechs. So the Squares and Stripes and what have you of the world.
That makes sense. So I want to get to Messari, but before we do, the chapter that you referenced around being at DCG and building CoinDesk. So in the time that you were there, this industry really went up another level from the 2-bit idiot kind of starting point days, at least. And the conference, for instance, went from something very small to something where you had Abby Johnson on the main stage talking about how much she loved Bitcoin. So
Thank
it really
you.
leveled up.
I know someone had something to do with that. Thank you.
So let's talk about that. I mean, that must have been a wild ride to be part of that growth story. And as you look back on that, what are some of the kind of key memories that you think really propelled the industry forward during those times?
Yeah. So maybe the transition, and I'll talk about that. I will give Barry a lot of credit because when I was getting my business cards, he had his Twitter handle on, and I was like, oh, should I have my Ryan's? And he's like, fuck, man. You like, keep the 2-bit idiot on. And it's like, great for the business card. So I joined in October of 2014, was kind of the first unofficial hire of DCG because back then it was still Second Market. And over the course of the next 9 months, Second Market spun out, was sold to NASDAQ, and DCG was created, which was a combination of what is now Grayscale, which was the creator of the Bitcoin Investment Trust, and Genesis, which was just the old Second Market trading desk, plus Barry's personal investment portfolio. They kind of got smashed together. And we went out and we raised money in 2015. But from the onset, I'd said, I can help you. My background's in venture capital. I can help with seed investing. I can help with the fundraise and kind of rebuilding the core team around this kind of new thesis. But ultimately, I don't want to be doing seed investing. I want to build something, get back to the operating side. And pretty much like clockwork, we announced in October of 2015 our fundraise from, MasterCard and, a bunch of high profile venture capital firms and other corporate venture arms. And that was in Money 2020. That same day, we met with Jeremy Bonney, who's the outgoing CoinDesk CEO, and started talking about the tuck-in to DCG. And basically, we acquired that business. I took an event team that I'd already recruited from Money 2020 and put it together with the CoinDesk editorial brand, which we put together in January of 16. That was the worst 3 months of my life without any, there's no fucking question. Like,
from what perspective?
International restructuring. First time managing a team really of that size and trying to get them all aligned from 2 different cultures, one of which was basically a bankrupt culture because they had just battle scars and war fatigue from fighting the good fight at CoinDesk, which was in the process of going under. And to boot, we had 3.5 months to pull off a large scale event that I'd never done before. And they say that startups, out of like the top 10 most stressful jobs, it's like event planners, active combat, startups, media. And so I had like combined like 3 of the top 7, I think, most stressful things. And we had like 3.5 months to pull it off. Never would happen without Pete Rizzo and Stan, who basically were the only 2 authors at CoinDesk for that transition period and held up the entire site. But, we ended up kind of brute forcing our way to break even in the 2016 event. And more importantly, it was a very, very good production. So 2017, we more than tripled the revenue year on year. And basically from the time that we bought the business, the time that I left, we had 7-8x revenue. And obviously the following year got into the 50x range in terms of revenue from when we had acquired the company. So it was a wild ride. I left in mid 2017 because CoinDesk was an events and media company, but it became clear that there was going to be a lot more to cover on the data and research side as the number of assets proliferated. And ultimately that's what led to Messari.
Yeah, well, that's a great transition. And by the way, the CoinDesk conference continues to be the marquee event of the year every single year in May. So let's transition to Messari. So what are you building with Messari? What was the itch that you were trying to scratch with putting the business together?
So there was a lot of folks that were talking about building like a quote unquote Bloomberg for crypto assets in 2017. And Dan, my co-founder, and I got together around that time, and he'd basically created a prototype that he showed me, which was on-chain FX. It had a bunch of advanced metrics to get beyond just like price, circulating supply, market cap that you'd see on CoinMarketCap. And the goal was to give a little bit more rigor to the different metrics that were highlighted and also help people understand the narratives around these assets, like the 101s around the assets versus just like the key price metrics. When we were talking about it, we recognized that before you can build Bloomberg, you need to have some consistent data structures, disclosure standards, and just general norms. And there wasn't necessarily going to be such a thing with crypto because there were no expectations about 10Ks or 10Qs or IFRS or GAAP standards for when it comes to accounting for these things. You had to create all of that at a kind of a foundational level. So our mission was to promote transparency and ultimately fundamentals-oriented decision-making around investing in crypto. To do that, we had this kind of front end and on-chain FX, but we also had this back end that became Messari's registry and asset profile logic now, where we wanted to engage with teams and actually get key disclosures around who the insiders were, where the businesses were located, how does the governance work, what do the roadmaps look like, when are there insider sales, what is the kind of token distribution policy that would ultimately help inform people so that they have a little bit more confidence they're not just getting dumped on, which was the biggest problem in 2017 at the time. The thinking was if we could build out a disclosures network and kind of develop a single source of truth for some of the basics, our engineering team could work on the back end to ingest either best-in-class data from third parties, like we do with Kaiko on the markets data side, or we could kind of build some of those capabilities in-house, like blockchain analytics and kind of other more proprietary metrics. So you can think about the evolution of the company and where we want to take it kind of in three phases. So the bottom layer, kind of like Edgar. Where does this information live? Can you build a network effect around that? Can you get some common buy-in? Because I think you need the XBRL standard, which is really the language of business and digital accounting, before you get to market intelligence solutions and a platform like Bloomberg. So we're kind of in phase like 1.5 now, because we've just rolled out our market intelligence solution for professionals, Messari Pro. We have a lot more in the way of features coming out in Q1 that I think we'll get that to kind of where we think about a full-featured product for professionals. And then our thesis has also been, let's not get ahead of ourselves with enterprise because there's not that many customers. And the ones that are there, they might only care about Bitcoin and Ethereum. Like that is not a big market. Like you don't need breadth of coverage if you're just an asset manager thinking about basis point allocations, which is really binary to Bitcoin, maybe Ethereum.
So I want to get into some of the disclosures and how you think about that, but maybe first, just I think you've had a really structured way of explaining what these assets are and which ones are interesting and not interesting. And correct me if I'm wrong, but I seem to recall a webinar where you sort of classified the assets that are trying to be money, the utility networks, and then maybe security token networks might have been your framework at the time. But curious what your point of view is now just on the categories of assets that are interesting and how a public blockchain might accrue value. Do you have a framework for that?
Yeah, so I called this the crypto asset barbell, where the majority of economic value is going to accrue to assets that have a monetary premium or underlying security-like properties. So rights to cash flow, rights to some intrinsically valuable asset. And then there's a middle layer of networks that have these quote unquote utility tokens that were basically being traded as if they were money, but they're supposed to be tethered to some real world digital resource. And then there was some that was plain old vaporware. I still think that holds true. I think the shape is a barbell, but it's really a spectrum where you're going to see Bitcoin today, certainly, maybe in the future, Ethereum more and more acting like a money. And the way that I kind of thought about those two, and maybe there will be others, but it'll be a power law distribution, is Bitcoin's the reserve currency for a decentralized central bank. Ether in 2017 was not about smart contracts. It was about being a reserve currency for a distributed investment bank, powering all these ICOs. And different people are going to have different theses on how many of these monetary assets there can be. On the other hand, I think crypto securities or tokenized securities are one of the most exciting elements in the industry. But in the short, medium term, maybe even quasi long term, the ones that are going to be uniquely interesting when it comes to crypto are new synthetic instruments. So how do you open up liquidity if you're an Indian investor that wants access to the S&P without, going through all the financial and kind of legal engineering to, set up shop in Bermuda and actually invest directly? It's the middle that's surprised me directionally positive, where I do think that there are more types of networks that are interesting in the quote unquote utility token market. And the way that I think about it is more, are these tokens securing some intrinsically valuable digital resource or information network? So file storage, there's a predictable price you can put on storage. That commodity you should be able to price based on the total value that's in a tokenized network for file storage. Bandwidth, same thing. Compute, same thing. The quote unquote, work tokens that give you rights to participate in some of these economies that produce fees, like the betting markets, could be interesting. And then I do think that there's some value. There are known values to governance rights. The question is exactly what is that? And I think if you're securing a valuable underlying protocol that you do not want to have corrupted, then there's probably some economic value to the stakeholders around that system owning a share in it and having a say in the governance. I don't know what that equilibrium looks like, but and every single room that I go into, I'm like the fucking enemy, right? Because my portfolio is predominantly Bitcoin. So when I went to DEF CON this year, they're like, why the fuck are you even here? And then like on Twitter, the Bitcoin maximalists, they fucking hate me. And I don't understand it because I've been like, one of the longest term like Bitcoin bulls, but I've said the occasional non-orthodoxy on Twitter. So now I'm like this ETH shill.
Can't please everyone. You also thought that Craig Wright was Satoshi, or maybe you still do?
I still think that he could be a part. So I'll tell you right now, there's a 1% chance that he is just based on pure numbers because he was early, no matter how you slice it. So my guess is as good as anyone. But I'm kind of hoping that he's not, just for very obvious reasons. But that's one of those instances where you rile people up and spin the wheel and see what happens.
So I think that's a very defensible point of view to have on how these tokens would accrue value. In that version of the world, do you think that people actually hold these utility token networks in a way that they even know that they're holding them? Or is it just all obfuscated on the back end, and when you provision file storage, something converts your Bitcoin into, or your US dollars, your stable coin into Filecoin, and you provision it on a quick basis and then come in and out of it without even knowing that you're using it?
I think that's like the 10, 20-year view. Most of this should be abstracted away. But the shorter term view, everybody's going to know how these things work, which is why you need better data and kind of education resources, because you have to assume that for the next 5 years, everybody is a power user. And there might be pockets where killer apps are developed that successfully abstract away the tokens. My general thinking is that it's still going to be investor-led. Staking is a good example. The staking services may have abstracted away all of the economics and underpinnings of DeFi such that you as a retail user look at the headline rate and you say, oh, if I buy this and hold this asset at Coinbase, I'm going to earn 4% yield on it. It's like a 4% dividend. Now, those users don't know that it's basically just a stock dividend, but a very tax inefficient one. And I'm well documented in being critical of the logic of some of these proof of stake systems. But what it does show is that the economically motivated actors, the investor oriented actors in these ecosystems are going to aggregate or find a way to kind of leverage other people's money to make a rational investment decision, even if the killer app and the end users are not paying attention, if that makes sense. So you've got this kind of two-tier. It's not that different from venture capital, right? Like all of the service providers in crypto are almost becoming venture capital firms with a 2 and 20 structure. We're going to make you some money, but we're going to take our pound of flesh as the service provider to just like automate all of that for you.
That makes sense. So I really like what you're doing around disclosures and want to get into that a little bit more. So the thing that equities kind of have going for them from a disclosure standpoint is that there was regulation in 1933 and then 1934 that made it necessary to provide certain things, like who's on the board of directors, how many shares are there outstanding, and just very fundamental disclosures. And you guys have done a great job of unearthing some of those things that you would think would be really obvious, like how many tokens are there on the networks? What is the supply schedule? When does it unlock? Do insiders hold X% of the network? But there's no mandate for them to give that to you. And there's no SRO, there's no top-down regulatory action. So how has that gone? I mean, how do you get these projects to actually disclose these things?
Yeah, I mean, the SEC has the U.S. military and Messari has me being mean to people on the internet.
You just bully them on Twitter.
Just fucking mocking them, right? Yeah. And I'm being a little bit tongue-in-cheek, but if you want to filter through, like if you want to cut through the noise, you can only be nice for so long. And I was joking with one of our investors about this and basically said, last year was the year where I asked you fucking nicely. And this year, there's got to be kind of a constant level up in the social pressure that's exerted on some of these token teams and exchanges. So our team has done a great job of just kind of brute forcing stage one of this based on goodwill, but most projects have no reason to be overly transparent, particularly when something goes wrong. And so what we're working towards in the first half of this year is the first steps in decentralizing this and getting I hope the exchanges bought in to the fact that we don't want the SEC involved. We don't want any international equivalents like the SEC imposing these outdated top-down reporting standards. But if we want to have any fighting chance of kind of navigating that, then we have to agree on like some common sense disclosure standards that make sense, even if they're kind of community provided, at least that kind of fit into like a common rubric so that we can agree on some single source of truth of these assets. If we can do that, the exchanges have all the power in the world. If they want to actually enforce this and take it seriously, every single one of the projects will fall in line because they need the liquidity and they can't afford to not be on the outside of this. So then the question becomes, what are the penalties? So there's one thing to have direct disclosures from the projects, but there's no real penalties for lying unless the exchanges are willing to like delist them.
Which we've seen with like Bitcoin Private.
But let's be real, like extremely, like that's the extreme edge case. There's a lot more kind of shady shit that goes on in terms of non-reporting and fibs, I'll be charitable, than we like to really talk about. But if you can kind of develop a mechanism where you can separate the repository of information being what we ultimately aim to contribute through via Creative Commons, which is essentially our entire crypto disclosure data set, and you can separate that from the audit function, and Messari can become one of maybe like 3 or 4 initially auditors or verifiers of the information, then there's value there, right? So you can have the entire data set open and free and forkable, but you're still not going to want to take these teams at their word unless you can prove it. So basically, who's going to be doing that verification work? Who's going to be scrubbing and engaging with the teams directly, asking clarifying questions and like polishing this up? One way you can do it is Wikipedia style, which I think in this industry would be a disaster. And the other way to do it is to try to reverse engineer something like a Big Four. And that's what we've kind of had in mind from day one. And we're finally getting to that point where we think that there could be other stewards that would do the same kind of quality of vetting that our research team has done.
And I know you've talked publicly about potentially that could look like a crypto network in and of itself in terms of incentivization and there would be some value there, to your point on governance.
We are going to create a DAO. And I love it because it's not introducing a new token. We originally thought about TCRs, but the way that we were thinking about our token curated registry was very much like a DAO in terms of like the voting rights and kind of the economic flows. If you read the old white paper that we'd put together, now that is being invested around, and the Moloch in particular is a perfect example of this, which we could very well fork or some kind of version of it. Now that infrastructure is there, it makes a heck of a lot more sense. And we get away from the whole, oh, well, you guys are just doing this because you want to like shill your own token. So, right, which kind of always made us uneasy too. But we were thinking about how can we economically incentivize folks to participate in this and give them some reward for doing the right thing and promoting better disclosure standards. And I think the answer is probably going to be a DAO this year.
That's interesting. And how would that work? Would you guys would?
Well, I mean, ideally, and you can advertise this on the podcast. Ideally, you get Binance and Coinbase and Kraken and OKX and Wobi to put in, $500,000 each per year. You get, some of the assets that are, the larger ones in the space. Maybe they're not putting in that much, but maybe they're putting in single basis points of their treasury into funding this. And all of a sudden, you've got 4 or 5, maybe up to $10 million annual pot that can fund a lot of third-party research. I'm not going to name check our competitors, right? Until like we've actually executed on this, but you can figure out who we'd want to invite into this. And look, I'd be perfectly happy if we have a $10 million pool and Messari is taking 2 of it and our competitors' complements are taking the other 8. That's great. That's more money than we're making right now. It's provably decentralized and it's kind of in everybody's best interest to promote. So easier said than done. But I think people buy into that vision and that ethos, because I'll tell you right now, it's a hell of a lot less expensive than just paying for lobbyists and lawyers, which has been the status quo investment to date, which I think is just broken. You have to show that we can do something better.
So that's fascinating. And maybe building off of that lobbyists and lawyers point. So
you got the scoop on that one. I'm giving Charlie the thing on Mt. Gox, but we haven't spoken about the DAO.
The DAO yet. That's really interesting. And I'm very long-term bullish on DAOs just in general, even the original DAO, just a fascinating concept.
Isn't it weird how everything interesting has to have like its collapse?
It does.
So this is why I'm staying the fuck away from DeFi this year, because I think that you're going to have like a DAO-like implosion in DeFi, and it's going to be really bad, worse than people think. And it's going to break everything. And it's going to be kind of like a reset, because that's happened to Bitcoin. It's happened to Ethereum. It's happened to the DAO, like basically exchanges, right? Like everything interesting, you have to like fly a little bit too close to the sun, lose your wings. And then, maybe you can pick your broken body up off the canvas and be a little smarter next time.
Let's just hope that institutional custody is not one of those things that breaks. I think that would be a long recovery process.
Well, you could argue that some custody has broken, right? There have been, again, not to criticize any one firm, but some of the exchanges that were hacked had flawed implementations where they were working with a third party custodian that, many would still regard as best in class, but there were holes. So yeah, I agree. Hopefully those have been ironed out, because if Coinbase gets hacked, I think that's one of those like nuclear events. But there are very few of those left that are like known unknowns, I guess.
Some people would say that the regulatory environment around the SEC is one of the biggest issues for the industry. And my point of view is that a bunch of these things, maybe the majority of these ICOs, are securities. And it's just a matter of time before we see enforcement actions. And there's probably a few that get grandfathered in because they were pre-DAO report, and maybe they get the Ethereum treatment. What is your perspective on how this plays out over the next few months? Is there a bellwether event like a Kick or a Telegram that you're paying attention to?
The problem with the SEC is they move so slowly, but part of that is a function of the legal system, which moves so slowly. I don't think that they've been doing a bad job. They seem to be much more strategic than most people, including myself at times, give them credit for. It's just so painfully slow compared to the pace of the industry's evolution. It's tough to swallow. But look at Telegram. The emergency injunction in October, I actually wrote about this earlier this week. I'd say that's a net positive. Telegram raised money in January, February of 2018. I considered investing, by the way. So I knew how just grossly dysfunctional that whole process was to get like into one of the syndicates and all the horse trading. And it was a complete clusterfuck. And that was at like the peak, right? So if Telegram was just going to turn around and like dump these grams on their users, okay, well, who's making immediate money on that? It's basically everybody that's like, okay, I want out of this. The market is at 30% of where it was when we bought in. So I just want to like liquidate this and basically have 200 million greater fools to dump on. Now, earlier this week, the announcement comes out from Telegram. Oh, well, we're going to launch the TON, the Telegram Open Network Wallet, separately to start, but it's not going to be tied to Telegram. That's a good thing, because that probably means the price is going to tank when it does like initially come out, and the 200 million Telegram users, when it does get forked in, will probably be able to access it at a better price. Now, I don't think that's even a price prediction now to say something like that, to think that like what was a $1.7 billion, $5 billion fully diluted valuation for these Gram tokens, that's going to come down a tad when it first gets liquidated. So that's an instance where I'd say the SEC is providing real value. Just without even winning a case, just the pressure to get Telegram to say, this is initially going to trade, but not be integrated into Telegram, is huge for end users. And so I think there's like examples like that and others where the kind of do no harm approach is probably orienting some of the practical decisions. And they do want to set precedents where the egregious abuses of the ICO market in 2017 and 2018 are penalized.
I think for me, the hard part has just been the inconsistency. So you could look at Block One as really just a slap on the wrist with a, $24 million fine. Meanwhile, also Ripple is just continuing to dump tokens onto retail investors. And they have this party line that they discovered XRP and didn't birth it into reality. So it appears that there's a path here where you just employ Mary Jo White and a bunch of lawyers and you skate away. And meanwhile,
yeah, but I think that's only half of it.
And how so?
Like that, there's a timing element. So some of these guys skated in right under the wire. The Block 1 guys, right under the wire. Tezos, right under the wire. You can look at the dates of the ICOs, Brave, Cosmos. There's some pretty good projects that, because they went live and they conducted their ICOs pre-DAO report from the SEC, they're probably going to get a little bit of lighter touch treatment. Now, what's interesting is, are you going to see Polkadot's, Telegram, Filecoin? Are they going to be the ones that have the most headache? And I think it's going to really come down to how much work have you done to actually decentralize the network from day one. Polkadot seems like it. Filecoin, I've heard whispers, but they've, ever since their paper was plagiarized, I think they've been, Juan's been a little bit tighter to the vest. And Telegram, not at all, right? Telegram's in the Libra and kind of social media giant camp, where they're just trying to roll their own crypto and just deploy it to their users and have that as a monetization path. I think those ones are going to continue to have a tough time.
That makes sense. Past couple of years, you've published a kind of a tour de force blog post on crypto theses with your predictions of the year ahead. And we've talked a little bit about the SEC and what you think about what they're going to do with some of these mega SAFs and the pre-DAO report. One of the other predictions that I thought was really interesting this year was you think that there's going to be $1 billion worth of exchange acquisitions over the next 2 years. I tend to agree, by the way, but I'm curious what your thought process is and your rationale behind that.
Well, some of it is they have all the leverage in the world. They make the most money, but they also spend the most money. So everybody that's not an exchange is selling to an exchange almost, right? Or like the vast majority of the revenue in the space. So I think when you have that dynamic in place, you're immediately like, if you're a vendor for one of the big giants and they're like, hey, it's an awful nice product you have there, be a shame if something happened to it, or be a shame if we went elsewhere, right? So you have this just extreme power imbalance between the exchanges and I think some of their customers. And that's not necessarily a bad thing for some of the vendors themselves, because especially if we see another run up, those could be very juicy valuations and kind of exits for some of the other startups. It just seems like most of the exchanges are becoming platforms. Those are like the new platforms for this industry. And I'd imagine will be kind of like the dominant centralized entities for the time being. The other really interesting kind of long-term bets that I think people would make or should make in terms of businesses that have a lot of value opportunities and significant upside are information businesses. We're talking our own book here, but if you look at the largest companies in the world right now, they're predominantly information networks. I'd imagine that if crypto is as transformative for finance as the internet was for, say, publishing and social media and search, then the power is not going to necessarily go to the exchanges, but it's going to go to the predominant data providers that are powering and serving as like the trusted oracles that are powering some of these applications. And what's interesting is this is not that far a step even for the exchanges to migrate down that path, because you look at the New York Stock Exchange and ICE, they are predominantly a data business.
That's right.
Today.
That's right.
So I'd imagine that as spreads come down, the same ends up being true for the exchanges and platforms.
I think that's exactly right. I mean, if you look at the existing market structure in traditional markets, most of these exchanges make all their money on data, and trading fees have really come down. I mean, the other thing that would support your idea here that there's going to be a lot of M&A is, what are these exchanges? Are they retail brokerages or are they actually exchanges? And do they want to own a retail customer relationship? In which case they probably look a little bit more like a Fidelity brokerage or a TD Ameritrade or something like that. Or do they want to be an ICE or a CBOE? It's a different business, not to mention spot versus futures and all sorts of adjacencies. And these type of businesses trade differently on a public market. And so you would expect, I think, that as some of these exchanges get closer and closer to potential IPOs, then they're going to have to start making some of these decisions on where do they want to go.
I'd agree.
So kind of closing questions here. What is the most concrete ask that you've heard from an industry participant to a regulator? One of the things that really rankles me is that we have a lot of people that are complaining about the regulatory environment in the United States, but they don't have a real concrete, here's what I want to see. Whether that be hey, rewrite the Howey test, because now we have digital assets, or maybe we want a safe harbor for some of these tokenized networks, or maybe it's just nothing. And maybe we just want to make these things comply with and comport with existing regulation. Have you heard a coherent ask?
I think the safe harbor one is interesting, but the industry hasn't earned a safe harbor. 2017 was bullshit. Like, it's just an irrational ask to be like, oh, hey, I know, we broke every single law possible, at least according to the spirit of the laws, but please just let us get away with it because you didn't have the letters right. I think that's unreasonable. But I would say the most actionable one, we need a de minimis exemption for crypto. Like the tax policy is a disaster. What they have in France and Germany right now, ideally you'd see adopted in the US. I don't think it'll happen, but basically anything that stays crypto to crypto, just tax exempt. You only get taxed on the way out. I think, that would solve a ton of headache. It would probably generate more revenue for the IRS because you'd have higher degrees of compliance, not because people are evading their taxes right now, but because they don't know what the fuck they're doing. And I can tell you right now, no one in their right mind wants to overpay before some of this is ironed out. So I think tax clarity, and in particular, a de minimis exemption that's relatively sizable, right? I think right now, like 600 might be kind of a de minimis exemption kind of threshold. I would actually hope it's higher than that as people think about these assets. And the reason I'd say that is I generally think that a lot of the income that people could make in the next few years will come from staking and kind of dividend-like rewards or interest payments. That you can easily tax. It's easy for people to self-report on that. It's tracking cost basis for all the underlying that just becomes such a nightmare. So I don't think it's going to happen because the regulators and are not that forward thinking, and Congress is not going to do anything in an election year, but some jurisdictions are getting that right. I think Europe is probably closer to where we need to be, but it doesn't solve the US problems, which is still sizable.
I agree with that one. I think Coin Center has done some really good thinking and writing on that topic. Another question is, so you've just gone through a capital raising process, and right now, I mean, you want to talk about how crazy it was in 2017. I think right now might be one of the hardest times to be an entrepreneur, especially if you're not launching a token. And so you were able to raise capital from a traditional venture fund that is not a crypto fund. What advice would you have for other entrepreneurs that are building real businesses in this day and age, in this fundraising climate?
So first of all, it's both an art and a science, right? I mean, and the science is generate FOMO, have like a good narrative, like run a tight process and whatever. And this is actually my first time independently raising venture round, right? Like at DCG, Barry was the CEO and founder. Everybody knew, I was very much in a supporting role there. And then CoinDesk was funded by DCG. So the fundraising process was, hey, Barry, we should we should buy this company and smash it together with our events team. And it's not going to cost that much. And it could throw off a bunch of cash. Easy, done. So this was a first and it was in a down market. The first thing that I did was lay off 4 people at the end of 2018. Basically, the market tanked in November and we let a few people go, kind of refocused our priorities, and basically just said, we have to extend runway and we have to be able to get to this date, and basically postpone the initiation of the fundraise because we weren't going to go out in January when the knife was still falling. So we ended up delaying until April when we saw some of the uptrend. And fortunately, we were able to bring in some revenue from the registry business that sustained us. Some of us, took pretty significant pay cuts. And, at that point, I think I met with the good and the bad news is I know most of the investors in the industry from my experience. So the good news was we had meetings with all of them. Bad news was we had meetings with all of them. And it's just a grind. But we ended up very fortunate to be working with Jeff Clavier, who's joined our board, and the Uncork team. They're fantastic. This is actually Jeff's first crypto investment, which we're very happy to be driving this forward and kind of be the flag bearer for attracting new people from the investing community into the space. I mean, there's no good answer other than we were just relentless in terms of pounding people and already had a pretty good investor base to begin with, where, we turned around to the lead investors that we were targeting and said, look, we've got 15 other funds. You price the round and it's a fair valuation. This is going to get backfilled in about an hour and a half. And, that's a little bit of an exaggeration, but not too far from the mark. What people don't know is that we had a co-lead at one point that backed out the day that we were supposed to sign the official documents right before Labor Day. And I didn't know Jeff that well. I knew the co-lead well. I didn't know Jeff that well. You could imagine how I took that news from this person that I'd known for several years, as he or she was on their way to vacation for Labor Day, and like, oh, by the way, our fund is not, we can't do this for whatever bullshit reason that was given. So I called, like, I didn't know what to do. I grabbed like 3 beers went into a conference room and I called Jeff and I said, hey, look, I don't know what to tell you, but like this just happened. All the other investors, I'm sure, are going to be able to backfill this and kind of take up this guy's space, but it's not a good look. I'm just getting to know you and like this happened. And he just kind of guffawed and he was like, he's this French guy. He's like, lucky for you, I don't base my investment decisions on crypto VCs. So I love him so much for that. And like we got off on the right foot for that kind of badassery. But, sure enough, we kind of re-amended the docs and kind of changed the terms slightly to accommodate for the fact that he was kind of going to join the board and be the sole lead, but nothing else really changed other than we had the 11th hour setback. The final fire drill, right before it was like the brass ring was right there, and then it was taken away, but we were able to close it. A few weeks
if
later.
it was all smooth sailing, I guess in 10 years when you're retired on a beach somewhere, then you wouldn't have any good stories to tell. So I guess it all just adds.
I mean, I have too many good stories. Man. I have too, that's why I love coming on these podcasts because I always drop like different ones. There's too many to recount, but we have fun with it, and maybe I'll write a book someday. But I'm not going to be one of those dickheads that writes like a tell-all.
Yeah.
Like, oh, I know so-and-so did this, right? Like, it'll be predictably like my style through my eyes. Like, here was all the idiocy that I saw and experienced and my reactions to it without making other people out to be the bad guys or taking pot shots.
Well, I think you'd have a lot of pre-orders on that book. So my closing question is, where can people learn more about Messari? And if you have any asks for the community?
Absolutely. So we're on Twitter. I'm obviously, a little bit higher profile at 2BitIdiot. At Messari Crypto is slowly catching up to me, which I'm happy about. And then Messari.io is the website and where you can find asset profiles with a lot of in-depth coverage. We got a really slick advanced search. So if you just type /B, you're at a Bitcoin profile /E. You can kind of navigate around very quickly. And we have I think a deeper data library than pretty much anybody in the industry right now. We also have a daily newsletter, which I write, Unqualified Opinions, that you can sign up for through the sites. And your best path there is downloading the mega theses that Matt had alluded to, and then signing up for the email list. And
I love On-Chain FX. It's still up there and there's no BitConnect ads. So I'd recommend to anyone who's checking the price to go to that website.
No ads, period. And we'd like to keep it that way. So we got to get this DAO off the ground and get the exchanges to play ball so that we don't kind of litter ourselves with advertisements.
That's great. Well, Ryan, thanks so much for coming on the pod today.
Thanks for coming in.
This has been another episode of On the Brink with Castle Island Ventures. To learn more or to subscribe to our newsletter, please visit castleisland.vc. And a big thank you to all of our listeners, except those of you who believe in the underlying blockchain technology, but not cryptocurrency. You know who you are.